Hello, how are you doing? Let me believe you're doing great tonight. Uh, so today I want us to have a look at the market that is beginning tomorrow up to Friday. It's next week's the possible price action for next week. All right. So I want to begin with right into the charts. Let me begin with DXY because the DXY it kind of measures the strength of the USD. And USD, the fact that it's paired with a lot of a lot of other currencies and other assets makes it the most traded pair. So I'll focus on DXY, and that is what will give you the bigger picture on what to expect beginning tomorrow. All right, so I'll go to DXY, and then later I'll look touch on gold because gold is the most traded asset as well, and then I'll touch on GBP/USD. It's another most traded currency pair, and then maybe Euro USD. Okay, so I'll touch on those, and then maybe you'll apply the same knowledge and just incorporate the knowledge into other assets that you trade. So right away, let's get into the charts. Okay, so this is my trading view. So let's focus on DXY. Okay, DXY right there. So I'll do a top-down analysis for DXY. So I'll begin from the monthly time frame just to give us the overall market structure. Okay, so I'll do this on DXY. I've analyzed it before, but for you guys, I'll just start afresh. So I'll remove all the drawings and then start afresh. So you can see DXY has been really very bullish because it keeps breaking these highs, displacing to higher highs, creating higher highs, and that gives me a reason to believe that bullish the DXY is having the determination to go higher. Okay, yes. So having this bullish structure on DXY, I believe that when the price traded above these highs, okay, these highs right there, trading above it and displacing above it, retracing, and the price retraced to this monthly fair value gap right there. Okay, so when the price retraced this monthly fair value gap, and this is the fair value gap that is holding the price, as you can see very well. So when you zoom in, uh, you see that the moment the price tapped into this fair value gap, okay, it tapped into the fair value gap and tapped into this block, okay, so it swept these lows right here, okay, swept that lows, and then it created a market structure shift right here, right there. Okay, so when it caused the change of character at this point and traded into the mean threshold of this wick that swept the previous lows right here, and that is what the price, and that is the reason why the price is pushing higher. So the immediate draw on liquidity for DXY is these highs right there, because we've already seen that the price, we've already noted the point where the price is coming from. This is the value gap, and it failed to displace below. It swept these lows and then causing a market structure shift right there. And this gives me a bullish idea. Okay, it gives me an idea that DXY might be bullish based on my analysis that I've just made. And then another second immediate point point of interest or draw on liquidity is this high. That is on the monthly time frame. Now, going to the lower time frame, that is the weekly. Let's see the weekly time frame. Let's see it in detail, all right? Okay, in weekly time frame, you can see again that it's giving us a bullish structure. Okay, this is the immediate draw on liquidity that I drew on the monthly time frame, and this is another one. So when the price traded to this order block, this was a week in the monthly time frame, but it's an order block in the weekly time frame, right? That's an order block in the weekly time frame. Traded is the order block of the weekly time frame, changing the character right there in the weekly again. You see, so all these things comes together and you see how they are related. So there was a change of character on the monthly time frame. On the weekly time frame, another bullish change of character. Okay, and then the price went higher. Okay, then when the price traded above this high, it traded back to a very small fair value cap. I don't know if you can see this fair value cap right there, into that fair value cap, and then it broke structure right here, right there. When it broke structure, it left an order block and a fair value cap. That is a fair value cap, okay, and an order block right there. That is an order block. This order block and these BD arrays are the arrays that are pushing the price higher. And the immediate show on liquidity is this high and this high. And hopefully, these highs right here, this gap, this gap right there. So that's where I believe the price might be headed to in the near future, next week. Okay, so going to the weekly, having the order flow on the weekly being, on the monthly being bullish, on the weekly being bullish. Let's see if we have something on daily. Again, you can see there's this gap that the price traded into again. This gap, this gap. It's the weekly, the new week opening gap. It's the end work. It traded into the gap, and then I believe the price is going upwards. So let's see if we can find anything on daily to support our idea. All right. On the daily, we can see that, okay, that's our drawn liquidity. And you can see it has equalized. And I talked about equalized before. Okay. So this daily also swept the lows right here with this week and traded above this high right here. Okay. Traded this above this high, trading back into this gap that I showed you on the weekly opening gap, trading into this block. I'll consider that as an order block, and then balancing this gap right here, all this gap, balance the gap and closed back upwards, and this is the gap, and this is the order block that's pushing the price higher. Now if it's pushing the price higher, this is what the price is coming from. Okay, and the immediate show on liquidity is this equal highs right here. So let me just mark this to, okay, so those are equal highs right there. So that is the immediate draw on liquidity. Now having this on daily, we can see again that this is a break of structure, and this is another break of structure. Okay, that is for me, I call that a break of structure. And then when it broke the structure, I'm expecting a retracement. And where am I possibly retracing to? Okay, the price might retrace to this gap, this daily gap right here, because we need more strength for the price to go higher. Now, if you expect if you expect more strength for the price to go higher, where is it going to begin from? So this is the gap right here. So the expectations of me will be, okay, sorry, this price, once it caused a break of structure up here, I'm expecting the price to come retrace to the fair value gap of the daily time frame, to reprice, to gain more strength and more liquidity in the internal BD array before going up higher to seek for liquidity or this point of interest. In this case, the equalize, okay? And you know how equalize are mostly hunted in the market. So that is my expectations on DXY. So I'm gonna be bullish hopefully the rest of next week, from Monday, Tuesday, Wednesday, or Thursday, hopefully, because have this equalize as the target and have this highs as the target as well. So those are my points of interest or my draws on liquidity. So this is what you expect on DXY, all right? Expectations on DXY, like that. So expect this cap to be filled maybe on Monday or Tuesday, but once the price comes to this point, expect the higher prices to come in, okay? Right, so that's it for DXY, and let's go to gold. It's a most traded asset for many guys, especially my students. They trade gold a lot, so that is gold. Okay, so let's go to gold. Let's have a look at gold for a while. I'll clear everything, remove all my drawings, and go back to zero, just to begin afresh for those who are beginning to, or those who want to get the whole picture of it. Okay, so for gold, we realize that it's been so bullish for a couple of months now. So it's been very, very bullish. Okay, sorry for that. It's been very bullish. We can consider the monthly candlesticks trading above these equal highs right there. The first candle that traded above it closed below, and there was kind of a bearish month here. But the next month traded above the previous high, okay, closing above it. Now, if it closed above it, that was a displacement, all right? That was a displacement. And that alone gives you a reason to believe that the prices might still be bullish, right? And you see again, the next month, the close or the high of the next month, the previous month, sorry, this this month of April closed above it. If it closed above it, having the knowledge of the candle science, if you haven't seen the video that I posted just a few days ago, it's in my channel. It's about the candle science, just studying the candles, how it closes, how it opens, the wicks and other stuff to tell you or to predict the next possible price action. So now that this candle closed above it, I would still expect something bullish, and that is why we were bullish last month. But what happened right here? Okay, what happened right there? If you can see it very well, we see that the month of May, that is last month. Yes, okay, that's last month. Didn't displace above the month of April. It simply swept the high of month of April and closed back in. So the body is inside, the body is not outside, it's just the wick. So it wicked the previous the previous month's high and closed back in. What does that tell you? For me, it tells me that the momentum, the bullish momentum is dead, or might not be as strong as it began all this while. Okay, so my expectations is this is not a displacement, it's a sweep of liquidity. If it swept the liquidity, meaning the price is coming from this high. Okay, so it's a sweep of liquidity to another liquidity. So from external, in this case, to internal, or from internal to external. But in this case, we are saying that the price swept previous month's high, failed to close above it as these candles did. So what is your expectations? Seek of internal liquidity or external liquidity if there is one. Okay. So what do you see? If you are expecting the down prices to come down, where will they go to? Let me show you something. So I'll pick this. If you can see very well, there is a monthly gap right here, right? There is a monthly gap right there. This is a monthly gap. It's a monthly fair value gap. So if the price came from external liquidity, I'm expecting to go for an internal liquidity. That's the fair value gap. And again, you can see that there is another very huge fair value gap right here, right there. It's almost just close to the other one. So there is another monthly fair value gap, a very huge one. So if for me the price, if I have the expectations that the price, or if I have already seen that the price is beginning to go down, where is the immediate point of interest? Or where is the immediate point of target? So my immediate point of target is this one, because this month failed to displace above the previous month's high. So my expectations is the price is bearish. If the price is bearish, where is the immediate target? My immediate target is this gap right here, or this monthly low, this month of May low. So that is the immediate target. But you see, the monthly low of the low of May forms this fair value gap. So hopefully, that's gonna be the immediate draw on liquidity. All right. So let's go to weekly. Let's see what the weekly time frame has for us. All right. So for weekly, all right, this is it for weekly. I don't want to delete the drawings that I made on the monthly time frame just for reference purposes. You get? So this was the high of previous month that was swept. There was no displacement, as you can see. It's very clear. That was a sweep. And then for weekly, this is the immediate draw on liquidity. This was the monthly fair value gap that I drew. Now for weekly, I don't think there is a lot of things we can really consider, but you can see again that the previous week's high were being swept. There was no close above it. All right, there was no close above previous week's high. So meaning there is every reason for the price to reach to this fair value gap here. Okay, there is every reason. All right. So let's go to the daily time frame. Maybe it's gonna give us some more insights on the same, right? So let's zoom. Okay, like that. Let me remove this. This was the highs of the week. And to remove that. Now, on the daily, you can see that it's the order flow is bearish. Like we can see all these massive bearish candles forming, causing gaps. Okay, so this is a clear it's a clear bearish order flow. It's a clear bearish momentum, okay? Because this high was swept, traded below, and this was a market structure shift right there. That was a market structure shift right there. And even this one was a structure shift as well, but that one would be low probability because there was this gap, so you never knew if this gap was going to push the price back high. So if that gap failed to push the price higher than this high, then that gives us failure swing. So once the price traded below that zone, we can see that it created a fair value gap right here, right there, okay? And normally you would expect the fair value gap to be retraced, okay, and the price to tap back into it before going to the direction it had to go. So if you can drag this fair value gap, we can all see that it was tapped, okay? It was tapped. So that fair value gap was or is already mitigated, okay? If it is mitigated, that is the same fair value gap that pushed this price down below these lows here, right there, okay? And this is a displacement. This is a displacement. So if there is a displacement, that gives us a reason to believe the price is still bearish, okay? When it displaced, what do we see again? You can see this order block, the daily order block, and the daily fair value gap right here. So these are daily fair value gap. The fair value gap was mitigated, but however, the price traded above this fair value gap. It traded to this order block. Okay, so let me remove this. It traded above this fair value gap, filled the whole fair value gap, and traded to this daily order block. And we can all see that the daily order block pushed the price down. So the current prices are coming from the daily order block, okay? And you all know that this order block seems to be strong. It's very clear, it's clean. So if the prices are coming from the daily order block, where is the immediate draw on liquidity? Again, is this low? Now on the daily, we can define these lows right here. And these lows again, these lows, and these lows, okay? These lows. But you can see again that this seems to be, let me remove this. Let me remove this. Having that in mind, that this might be our immediate draw on liquidity, let's move to the 4-hour time frame. And before that, we can see this daily gap. This daily bearish candle was it was a massive one. Okay, it was an engulfing. It was a bearish engulfing candle that engulfed this bullish candle that tapped the order block. So obviously, we are expecting prices to go down, and this is our immediate draw on liquidity, not leaving this fair value gap on the monthly time frame. Okay, so let's go to the 4-hour, okay, to just give us the details. Okay, this is the 4-hour. This is the 4-hour. So this price is coming from the order block. We can clearly see that. The price traded so it came down massively with high momentum. Okay, it came down with high momentum. So the expectation will be when it came down with that whole high momentum, there are these gaps. I don't know if I'm gonna call it breakaway gaps or whatever it is, but those gaps and this gap right here. Okay, and we can clearly see that this is a trend line. This is a trend line liquidity. All right, this is a trend line liquidity. Let me just mark it to be very clear. This is a trend line liquidity. All right, it's a trend line liquidity, and we all know that a trend line liquidity has it has a potential to attract the price. So what are you expecting now? Having all that whole idea in mind, that from monthly we've been bearish, the weekly bearish, to daily bearish, into 4 hour, we can see all this what we are seeing right now. So the 4 hour has traded into this sell side demand zone. Okay, so I have a belief, or I have a reason to believe, that where the price is standing currently, this supply zone might push the price higher, but not to this fair value gap. Do you know why? If you measure, okay, sorry, let me just, if you measure this high to this low, we can see that this is a fair value gap, but it is in a discount zone. So we don't want to sell when the price is in a discount, but we want to sell when the price is in the premium point. Okay, so the only BD array that is appearing at the premium zone or the premium point is this fair value gap here, colliding with these fair value gaps right here and right there. So we have to believe, based on our analysis or based on our experience in the market, that the price has the potential of retracing to this gap, all right? And then this gap will push the price down, hopefully. Again, hopefully, don't take my word for it, okay? So that's what I'm expecting, this gap at the premium to push the price down, to seek this all liquidity, all resting down below. And we can see this liquidity is almost attached to the monthly fair value gap. So that gives me a reason to believe gold might buy to this fair value gap and then push down to this monthly fair value gap. Now, we'll begin to monitor the price once it gets here. Maybe this fair value gap on the monthly time frame will be strong enough to push the price higher, or if it is disrespected, maybe the price will push downwards to this bigger fair value gap. Okay, so that is the expectations on gold beginning tomorrow, Monday. All right, so I think that is it for gold now that we've seen DXY. And you know, so if DXY is buying, if DXY has the potential to become bullish, then gold or all the pairs with USD being the quote currency have the potential of selling. So now the idea of GBP USD, Euro USD, AUD USD, and Gold USD has the potential to sell now that DXY is showing the determination or the strength to buy. All right. So up to this point, I think we are so clear. I may not have the enough time again to look on GBP USD, but you can apply this top-down analysis on the same GBP. It can have the same structure. All right, they all have USD as the quote currency, so there's some similarities in it. Again, don't take my word for it, but that's what you can just quote to your charts and have a look at them. All right, so those are the expectations beginning tomorrow. Hope it works out, and then I'll meet you again next weekend and we'll see how we went wrong and how maybe we can better our ideas to come up with better analysis. All right, so thank you for staying tuned to this small session, and I believe you'll be tuned in for next weekend again. We do the same thing. Hopefully this works out. Thank you for watching, and remember that I have online classes for new beginners or advanced traders as well. You can join me. You can look into the description box below, and there is my link on my Instagram account, the Instagram account link. I have my Twitter account link as well. I have my contact email address, and I have my Telegram link. So you can get me through those, and maybe you can see how we can better ourselves in the game, right? So thank you for watching, and until we meet again, guys, thanks and peace.